Hey guys, we are back in Los Angeles. I can't tell you how great it was to spend, so much time with friends and family and, back east. And you guys are all awesome. So everybody in Ohio and New Jersey and Philadelphia and, all that great stuff that we did. It's so cool for so many people to take so much time out of their day to come and say hi and spend time and go out and have fun and stuff. And that was really great. So big shout out to everybody back there. Big shout out to Eric for driving all the way down to Philadelphia to spend a couple days with us. That was cool. And he's got some questions about today's QQQ trades and the NQ trades. They were fantastic. It was a really good day to be in front of this stuff. Bill Gates had that great quote about banks. Banking is necessary, banks are not. Well, banks make a lot of trouble, and a lot of you guys know that the reason that I stay out of certain sectors is because banking and oil is wrapped up in those things, and I don't like trading them. But today's impact included tech and consumer and everything else, so it rolled right through to the Nasdaq, to the NQ, and that's where we do a lot of trading in the QQQs and the SQQQ and the TQQQ, right? All that good stuff, and in the NQ, of course. So let's take a look at the charts and see if we can address a couple of the questions, especially that Eric popped up, sent out to us in the first hour trading pit this morning. Some of you guys saw that if you were there. If you weren't, then we're going to go over it right now. Eric, kudos for getting up and trading this morning after that travel day yesterday, because I can tell you ours was rough. So getting back from Philly was a rough flight to say the least, and hopefully you guys in the East Coast, hope the weather's cooperating today. I haven't seen a forecast. I hope you guys are not riding a storm out there. All right, so let's take a look at our charts. Here you have it. This is this morning's open. So we all know what happened. The banking news was awful. I've got friends who have a bunch of QQQ puts, and that's obviously been a very good recipe for the past week and a half or so, right off those highs. So, we talked about that here, that we had, you got into an area where on the, daily and on the weekly, this was probably a good place to anticipate a rollover. A lot of people read into this stuff more than I would. I'm focused almost entirely on the technicals, and from a technical vantage point, there was every reason to think, that we were going to see this move and, probably get down here and retest these lows, which looks like it's already baked into the cake, and then probably maybe a retest of these. So let's see. It's going to depend on the news. It's going to depend on what, what we get in front of next in terms of opportunity or, opportunity cost here. The Qs this morning. So here, this goes to Eric's question about anticipating where to get short on this stuff. So again, some of you said you're trading in IRAs and you're trading in things that can't short. You can use some of the alternatives, some of the proxies for things. So like the SQQQ, that's going to be a levered ETF that gets you short when you buy, right? So you as the market's going down, you can buy the S, and it will replicate as your long position keeps moving. It's going to replicate what's happening on the short side of the market. If you have questions about that, you can email me, but it's nice, it's amplified, it's $18 a share. The only downside there is there's a lot of really big blocks that people are trying to trade, and sometimes it's hard to get those big fills, right? But other than that, in this morning's trading, what we were looking at was some levels of confluence. So the first thing that you could look for, so if you're thinking about, say, the Apple trade, this is for Eric, on the Qs, of course, you're not always looking for a bounce to the upside. It's not, a lot of people like to go long all the time on the futures on these indices. That's going to work until it doesn't, and when it doesn't, boy howdy, you're gonna be feeling it. But this morning we had this up around the first support was where price was oscillating right in the pre-market, and that overhead resistance level was giving me every reason to think that we were going to have a repeat of the earlier move that was down from the central pivot into 372.17, and that any time that we were going to bounce on that support level there, that we were going to get a replay of the move back down into 17. So that's a big move in the futures, sort of a smaller move in the Qs. You'd have to amplify the share size a little bit to capitalize on that. But then when it opened, it wasn't the upper level that was tested, it was the lower threshold level. So this level right here, you would have every reason to think, based on what was going on in the pre-market here, that if we broke down through there, that we had a shot at moving lower. I'm not going to say it was totally logical to assume that you were going to get this baby right here. And if you were trading the futures, that was actually a tough fill. It was an easy fill on the Qs to get short 372.17. You weren't going to do it with a ton of shares, but you were going to do it if if you were, I would say, under 1,000 shares, pretty easy to fill right there. Then, as we got lower, where is the support and resistance that you want to play with? And for me, first criteria is always, where are we on the session? What are we doing? So this thing's moving lower. I want to stay on the right side of the market momentum. We know that all the news was bad first thing this morning. Everything out of the gate was no good for the markets, and that we could expect that we were going to get some price persistency on the downside. If you look at your chart, then what you should be drawing as support and resistance lines as the morning is opening up here for you is this 370.50 level, because you can see there that price is inflecting right around there. It does get up a little bit higher, but look at these volume nodes and everything, and really try to figure out where's the meat of the move, and it's right here at the 370.50 threshold. So what Eric is asking about is, how do you anticipate correctly what the inflections are going to be? How do you go and time these entries, time these exits? So you could do a couple things. You could wait for the safer entry, which is going to be up at this threshold, right? Because that's the top of all your volume dynamics. And the risk there, of course, is you're not going to get filled. Or you can look at the fact that as this played out, this level right here represented some real significant volume, and that says that when you come back up into it, you're going to get this kind of thing happening, where you're bouncing in and out of that zone. 370.50 all the way down to 369.64. I don't care what you're trading. That's whether it's Qs or NQs or SQs or TQs or whatever. You're a happy person at that point as those moves are happening. And really what you want to focus on then is just the reactions at these major levels. So the next major level that you're looking for is this guy down here. And as price makes this, I don't have a line drawn here yet for you guys, but as price gets down into the lower threshold levels here and keeps moving back up then into this threshold level, then what you're looking at is there's two possible places that you're going to want to consider the opportunity for a short side, a continuation move to the downside. Right now, if you're assessing everything the way that we did at Super Bowl Sunday, and if you're looking at everything the way that we do in the boot camp stuff and kind of what Julie and I do, then what you should be focusing on is you've got this right here. This is your session VWAP. You have this guy right here that is your 2 standard deviation move up and away from the central tendency, up and away from the price. That gets you up into the 370.21 pivot and also into all of this volume by price. So what it's telling you is right now is a place that I would be considering. If I wasn't doing this video, I'd be looking at shorting 370.10 and looking for a first move back down into this 369.64 level. And again, don't punch these numbers up exactly. You want to look at things and just figure out where's the overlap. Where is the overlap between that line that I drew over there, the measure of central tendency, right? Your average of the closing prices there. All that stuff is going to act as gravity to bring price back in again. And when everything lines up the way that it did today, this goes to Eric's question again, right? You've got an anchored VWAP here. This is the anchored volume weighted average price of the move higher. You've got an anchored VWAP here. This is the anchored volume weighted average price of this move lower, right? So that move lower, that move higher, everything's lining up right at the same level. All of those things tell me that either a move from the 370.21 pivot or from the 370.10 overhead resistance line, or from the 370.21 anchor or volume weighted average price for the session, or from the 370.21 two standard deviation excursion from the mean, right? All of those things line up and say, well, that's a possible trade. That's a place that I might look to get short again on the triple Qs. So it's been a good morning, and again, you guys who have been with us for a long time, or who went to the training in Vegas, I guess all of those guys have been with us for a long time. All this stuff is where you want to focus your attention. So you just want to keep looking at all these things and see where do all of these, right, or all of these dynamics that you're looking at over the course of the day, where does all of this stuff then give you overlap? Overlap is confluence, and confluence is the thing that can get you in front of opportunity and get you in front of the things that have the lowest risk. All right, so it's a mouthful. I know it. It's a handful, and if you're trading this stuff and it seems confusing, or you're having a hard time figuring out where levels overlap and all that kind of stuff, then just go and zoom back out again and look at the bigger picture. And when you look at the bigger picture, so you see the thing setting up in the smaller time frame, or in the smaller picture. So you're looking at one chart and you see support and resistance lines, and you think, okay, well, maybe this is valid. Just go and zoom out and look at the broader picture. Look at more charts. Look at more things that need to line up, and wait until everything lines up before you go and take an entry. And then, generally speaking, those are going to be the ones that keep you out of trouble and get you in front of the opportunity. All right, so good questions, Eric, and I think that the rest of you can benefit by looking at this stuff as well. It's always important to keep it in front of you. I am jet lagged as I don't even know what, so I am going to cut out of here, and I will see everybody tomorrow morning in the first hour trading pit and right here for your triple Q update. Thanks.